Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, March 1st, 2024. I'm Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. New month of trading. The first 2 months of the year are in the books. Check mark trend months here for these markets. Another higher value relationship, which suggests that this month also could be another checkmark trend month unless a failure occurs at the midpoint of the month, which is right around 5,000. A failure there could open up the recent lows here back toward the 48.50 level up to 48.70, right in this zone. There's a nice LVN there as well, CLVN, that could provide a little bounce area if a drop that deep occurs. Now, to begin the month here, we are closing near the extremes of the month, which means we could see a little bit of reaction here that takes us back down. Even if we were to see a 1 or 2 day pullback like we've seen, again, the pattern has been to buy it and look for new highs yet again. Now, at some point, again, as we continue to mention, this pattern will cease to exist and will change the pattern some way. But until then, the market continues to show a propensity to buy off the lows and take this thing higher until proven otherwise. So again, we'll see how price responds here off the previous highs. Any failure at the previous close here starts to work things into the pivot range, and then in here that could provide an opportunity back up the range. From an intraday perspective right now, a bit of a range bound early morning here with a strong push downward in around the 4 o'clock hour Central Time. Only 27 points of range though right now, 57% of ADR, and we could see movement between the two extremes until proven otherwise here. We'll keep an eye on the trend, especially the 8-period rising average. Taking a look here at the NQ. Similar price action out of the NQ, only this one has developed more of a range bound look and feel over the last several weeks here. We have now put on a new key range here for this one. Strong low, strong high, midpoint. This gives us a new key range to watch. The measurement of this key range would take us down as far as 16,321, which would be right at the low of the year. If a downside break were to occur, an upside break takes you right to 19,000. So really good equidistant targets on both sides of this market here. Again, we do have higher value relationship again for this month, and any pullback into that range could still be a buying opportunity with a shot at moving this thing higher. Right now, intraday compression for the most part, also selling pressure around the 4 a.m. time. We have 53% of average range right now as this thing tests recent highs. Again, to close the month right near the extreme of the month could lead to a bit of an early rejection that could drop things into the pivot range, but as we've mentioned before, any pullback into the pivot range could still be a buying opportunity until proven otherwise. A failure at the midpoint at around 17.7 opens up a return back towards 17.2. Let's take a look here at crude oil. Crude oil attempting a breakout here from the larger range. This inside day relationship, the previous session had quite the compression. I know it finished off the highs of the day, but really it was the compression throughout much of the day. We're seeing an upside break and move. This break looks quite a bit different than a couple of days back where it attempted an upside breakout here. Today's upside break has a bit more elongation, a bit more uptrending price action, and is approaching that $80 level. We have not seen that level tested all year. This is also the previous year's close price right there, and we're breaking through or attempting to break through that level at 79.60 the first time here this year. All the other times it's been batted back down, and so we're pushing through that area right now. This is a big time zone right here. 79.60 is the key range high here. The midpoint is a little bit lower, but this upside break, if it can take hold, again, could be a huge move to the upside. And as we mentioned before, if we are going to see a transition phase out of this lower market structure through the previous year's midpoint, through the key range high, then it's probably going to be a high range day in the $4 zone. And today's low is 78.02, which means if we're going to have a meaningful transition day, we want to have a huge upside move that takes us through 81 and getting close to 82s. You know, a $3.5, $4 range would be something like this. So it needs to be a meaningful upside break where we close at the extreme of the day. Can today be that day for crude oil, or is it going to be another day where we get pushed back down into this narrow range? Now again, this narrow range right here is a 12-day narrow range with about 8 to 10 points of movement here that could be seen upon a breakout. So if we are going to see a breakout and we're talking 8 points, then we can use the bottom of the breakout bar at 78 at 8 points, and you're looking at 86 right here. 86 would be the 50% extension also from this key range. If you're looking at 10 points, then you're looking at much more upside than that. So there's quite a bit of energy here. Can today finish with a strong breakout day, or do we fail back below the 79.25 level? We'll keep an eye on crude. Taking a look here at gold. Gold seeing some upside price action right now. The previous session here with a nice upside break and move got to 2060 and got away from the 2040 level finally. It's starting to make that move. We talked about this 6-7 day narrow range here, which has about 60 points of range built into it. From the lows of yesterday's range, we could be looking at a move that takes us toward the 2100 level. Now I know this market really hasn't found much in the way of acceptance beyond 2080, so that's a huge level to continue to watch. If price can't get through that level, we might be rolling right back down to 2040 and maybe even back into 2000. But again, this whole bit of range bound action here is kind of a major buildup of energy before this thing goes bananas in terms of volatility. It's kind of what happened a little bit before, where it went mostly sideways and then we saw a ton of volatility that entered the market. So at some point here, we're going to see some significant movement out of gold. Right now, still trading back and forth within the trading range and is currently moving higher within that range toward 2080. Lastly, looking at the YM. YM right now continues to maintain an uptrending price structure, but is not as bullish as the ES or the NQ right now. You can see the close here of the month is well off the highs of the month and is about equidistant or maybe even closer to the previous month's midpoint. That suggests that, you know, you're very close to that midpoint. There could be a failure at the mid that could open up the previous month's low. That would take you back toward 38,100. The major level we've been watching here is 38.8. Can the market hold above that level? A failure at 38.8 and you start to rotate back into this lower market structure here. So at the moment right now, mostly compressed, doji-like day, 165 points at the moment. That's 54% of ADR. A similar sell-off in the 4 o'clock hour there, but bounce back from that selling pressure. And again, we're going to keep an eye on the pivot range to begin the month. Any pullback in that range, and bulls want to keep it bid until proven otherwise. A failure here, and you're rotating right back down to the bottom of the range. All right, that's it for now. We'll see how this thing plays out here heading into the rest of the session. Good luck, trade well. Happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.